So the first thing we are going to be doing here is to scale up into a higher time frame. We want to see things from an holistic point of view. And this is what we have here. So I would like to delete all those ones so that we can have a clean chart to look at. And then our key level at the $25,000 mark still remains valid based on this current structure. And from the look of things here, from the daily time frame, things are looking very bearish at this point, considering this selling pressure we have been noticing since the $31,000 mark. Now, if we bring out our line chart and then there is a key level here, I was able to spot at just a glance, and that falls exactly around the $27,000 mark, which I always like my key level to be in gold. So let's change the color here. So we give it a golden color. So we name it, we label it $27,000 mark so that we can have a visual representation of what we are talking about. So we give this a gold color too as well, and then place it at the top right hand side of our screen. Now, if we bring back our candle chart right now and considering the impulsive move, things are looking a little bit more bearish. Look at what we have here. Following the impulsive move, it's looking like a head and shoulder pattern, and we have the right shoulder looking a little bit choppy around this area. So we have something like this. And you all know, whenever we have this kind of choppy situation like this, giving us a potential reversal pattern, the next thing we want to be doing is to identify the neckline of that reversal pattern, which will definitely be a platform that will validate the potency of that reversal pattern. And with that being said, here we have a neckline situated at that $27,000 area, a very strong psychological area considering the round figure of that price. And if we go to as far back as the month of March, you will see how that level has been a major demand zone in this market. So every attempt by the sellers to break down the structure has been met with strong resistance from the buyers. So we want to take this into consideration too as well. So what I'm going to be doing here is to mark this out as a demand zone. So as long as price action continue to reject that area, the potentials of buyers still remain very, very strong around this area. So I will label this area our demand zone. I would like to make this a little bit bigger. I give it a white color, place it right inside the box, and give this okay. So we have a demand zone figured out at this point. So as long as price action trades above that area, we look out for buying opportunity. So I want to look out for buying opportunity above the $27,000 area from a long-term perspective. So now let's scale down to a much more lower time frame where we begin to see things more clearly. So here we are on the 4 hours time frame. So the next thing I will do on the 4 hours time frame here, look at after price action tested the peak here at the 31,000 area, we have seen price drop to the downside. And what we are going to be doing is to connect the series of lower highs, and this is giving us a trend line to work with. So please follow me through with this one. If you have any question, feel free to let me know in the comment section. I will be checking the comment section from time to time. So now, if you ask me that what has been happening in this market since the month of April, you will say it is bearish. But one thing here is that despite the fact that we have been seeing lower highs, we are yet to see lower lows. And for us to see a lower low, we want to see price action break down this level at the $25,800 mark. So I will give this a purple line, which will be serving as our yardstick for trading activities going forward. So we have the $25,800 mark identified here. Let's give it a purple color, and then we place it at the bottom right hand side of our screen, and then okay. So we have the 25,800. So scrolling it through here, so we can see we are yet to find a lower low. We had price rejected this level on Friday of last week, and right now we are seeing a situation here where price action appear to be rejecting that area. We have an hammer candle here, which is a sign that buyers might likely be present at that point. So if we are going to be selling the BTC USD, we want to see price action breakdown, retest the $25,800 area for us to join a decline to the downside from this area. So we are not selling unless price action does this. Now, another thing here is price might come back to retest the trend, this key level at the $27,000 area. If it does come back into the structure, we want to see continued selling pressure. That is, buyers are finding it difficult to break above the $27,000 mark. So if we see this kind of situation, that selling pressure continues here on our lower time frame, like the 15 minutes time frame, then we want to be part of a sell move while we have a sell stop order below the 25,800 to add more position to our existing trade. So this is how we are going to be selling the BTC USD, and it's looking very bearish like this, waiting for price action to break down to 25,800. But if it so happens that we have a breakout of the $27,000 mark, at this point we would have no other choice than to start looking out for buying opportunity. But if you are a cautious trader, you want to see price action retest the 27,000 area, look out for buy pressure above the structure, then we could join that bullish momentum to the upside. So our center of focus for today on the BTC USD is just within the range here between the 27,000 and the 25,800. So depending on how price action reacts to the zone will determine how we are going to be trading this. So a breakdown of the 25,800 will welcome selling opportunities, while a breakout of the $27,000 mark will welcome buying opportunities. And I also made a caveat here where I said price action coming back into the 27,000 area and we start seeing selling pressure where buyers find it difficult to break above the 27,000, we could sell from that area, then have a sell stop order below the 25,000 area to catch that potential move to the downside. So that is that on the BTC USD. Breakout of the 27,000 welcomes buy opportunity in this market. So let's see how things plays out in the next 24 hours, and obviously we shall come here tomorrow to review how well this instrument has been doing. And it's on this note I want to call it a day here. So it has been a wonderful moment with you guys. I'm really grateful to have this key moments with you, and I'm very confident that we are well equipped ahead of the New York session, as we were able to simulate all the possible potential opportunities that could happen on all of the pairs that we have been monitoring so far this week. So we were able to look at the US All Spot, the XAUUSD, the US Tech 100, the XAGUSD, the USD JPY, and of course the BTC USD. So we have like 6 instruments that we are going to be looking at for today, giving us more privileges of having more opportunities in the market. So let's see how things plays out in the next couple of hours. And for those who are already in a buy or sell positions whatsoever, if you have open positions right now, I told you secure your current position as we look forward to the GDP data coming up in about an hour from now, as we might likely be seeing a volatile movement in price action. So on this note, I wish you best of luck today, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well this pairs has been doing, and at the same time get ready for the New York session tomorrow. Do have a wonderful evening, everyone.